Hello everyone, today is the 17th of June 2021. We are into the 4th trading day of the week. So in this video, I'm going to run you through the 5 most focused markets: Euro dollar, gold, the Nasdaq, US oil and Bitcoin. So we are of course going to run it through in 3 simple steps. We're going to talk about what has happened, what's going to happen, and what will be our trading plan, so you can make your own decision whether or not to take up our trading ideas. Alright, so the first one, we have the euro against the US dollar. But before we do so, I just want to talk about what has happened earlier this morning, or rather in the midnight at 2 a.m. and 2:30 a.m., which is the FOMC Fed funds rate and the conference itself. So I'm just going to read you through what is the key highlights right here on the trade economics. So the Fed left the target range for its federal fund rates unchanged at this level, alright, so June 2021, but policymakers signal they expect 2 increases by the end of 2023. So this in itself is already a very hawkish statement. It signals that they recognize the rising risk of inflation, and there's a need to raise interest rate either faster or sooner or more in a way. So official noted progress on vaccinations and strong policies supports led to a strength in economic activity and employment. Alright, Powell did say that the employment market, or the labor market, is getting stronger. Bond purchases will also remain at a rate of 120 billion a month. So when it comes to the interest rate as of now, and of course the bond purchases, they still stays the same. Alright, that one hasn't changed at all. Meanwhile, new economic forecasts show that GDP, alright, seen growing 7% in 2021, right, above 6.5% during March projection. So the growth, the GDP growth rates in terms of the projection has also went up quite a bit. Alright, unemployment is seen at 4.5% this year, unchanged from the March projection, but inflation is seen much higher at 3.4% in 2021, which is 2.4% in March. So this is a figure that's well above 1.4% above their target of 2%, and that's a lot. And that is really the Fed saying that they really recognize that inflation is really high. And overall, to sum it up, they in this statement, they have really turned hawkish, and therefore the markets right now is expecting tapering coming very soon. And of course, interest rate hike, maybe it can be as early as 2022 rather than 2023. Alright, so therefore, if you look at the markets, the dollar itself has gained a lot, the gold fell, so on and so forth. So that's what I just want to share with you guys, because the FOMC, or the Federal Reserve, is the most important economic news or data we have to take note of in the forex markets. Okay, so let's move on. Alright, so for the euro against US dollar, as you can see yesterday, the price plunged all the way down, alright, and then it reaches the equilibrium level, right, at 1.2 flat, but it did not find much support, and it just continues to go and break lower this morning, or rather into the euro session right now. So right now the price is about to reach the bottom of the entire rising channel, which has begun since the break of the pandemic, alright, in 20th March. And over here at this level, if we were to pull out a Fibonacci retracement, it is about to reach the 61.8% level. And I also want to show you that previously there was a falling channel right here, and the price broke out at this region, which also tells us that this is an important demand zone. And right now the price is also about to reach this level. So going forward, okay, if we go into the 4-week time frame, well, it is really a pity, because yesterday we are actually looking to sell the euro against the US dollar as it reaches this level. Alright, but however, because nobody really knows what's going to happen during the FOMC statement and their press conference, so it is, however, still not really wise to try to enter prior to the news. So we missed this trade. It went all the way down. There's nowhere that we can really try to jump into the into the markets because the risk is definitely too high. We never know how much it can actually fall in that sense. So we don't try to attempt trades like this. It looks very lucrative, but if it goes the other way around, well, it hurts as well. So there's no point in doing so. So in fact, going forward, I think, all right, we will just simply wait for it to continuously go down. All right, when it comes much closer to this region, we want to try to attempt a buy. All right, although the short-term fundamental has kind of shifted a little bit. Right now, dollar seems to be pretty bullish. But however, we still want to remind everyone of you that the bigger picture hasn't really changed. The market, at the end of the day, still expect the central banks to start raising rates somewhere down the road. But right now, it's just the central bank saying that projections has gone higher. There might be more rate hike in 2023, stuff like this. So that doesn't change the entire fundamental, but just that the short-term wise, there is a little bit of differences, and that causes dollar to go up. But however, as the dollar keeps on going up, euro dollar keeps on falling, it will indefinitely go into a oversold zone. So therefore, right now, in fact, I think we are about to reach an oversold zone, and right now it is coming down to the bottom of this entire running channel, and of course into this demand zone right here where the breakouts happen within this area. So the trading plan is very simple. Just simply wait, right? Simply wait for the price to reach this level at about 1.1920, and that will be the level we want to attempt a buy. And in terms of the stop loss, I think we're going to set it even tighter. We're going to set it even tighter because the target wise will not be that far away. Because at the end of the day, if you look at the entire market range, all right, it is actually forming some sort of a symmetrical triangle, which also tells us that there are still more downside. Right, there's still more downside, and of course we want to take note that the price is currently right now breaking below the equilibrium level. So that is also a bearish sign. So the only reason we are attempting a buy is that we're expecting a stronger pullback in this area before it continues to go down. So that is the trading plan from just today, if there is a chance to do so. All right, and we want to quickly exit. Right, the first target, we want to quickly exit at about 1.1990, right at the equilibrium level. At the most, the final target will be, let me just pull out the Fibonacci. So if it goes down to this level, the final target, well, quite obviously is right here. I'll just turn this into a supply zone. This will be the final level we will look to actually close the entire trade. There will be somewhere 1.2050. all right, so that is for the euro against the US dollar. So it's straightforward, but if you know that it has now turned bearish in the short term and you do not want to buy, then you just have to simply wait for it to pull back. All right, but I don't think we are going to see it today. Still expecting the price to go down a little bit further, and probably only when it reaches the oversold situation, we are going to try to attempt a buy instead, but on a very short-term basis. Once it goes up, there's an opportunity for us to just take profit. We'll just take profit, right? All right, moving forward, we have the gold. All right, so for the gold, same thing as the euro dollar. All right, the price came all the way down. Yes, now broke below the equilibrium level. So it really looks very familiar to areas like this. Whenever price went above 1900, this time around it only reaches 1900, and then it started goes down. So now there's a very strong selling pressure. Price has broke out of this riding channel. It also broke below the bottom of this falling channel that's forming just recently. So it is a very bearish signal, and of course I think going forward we are going to sell as well. All right, but again, because right now it is very oversold, we instead will be looking to buy. But the first one I think very obvious is right here. All right, because this is the breakout area, right, for this major falling channel. So so I think this will be the exact price we want to buy the gold in an oversold condition. and as it goes upwards, all right, first level we want to look at going to 4-hourly time frame, all right, is as it comes back to this area. So actually I think today we have a chance. Just wait for it to enter this demand zone right here, and as it goes up, all right, the first level is really just right here, because you can see that there's selling coming in again, pushing the price downwards. So this is the first level we're looking at, 1822, and then as it goes up, then we will look at the breakout area right here. All right, this is where it break out of this this neckline, or rather equilibrium level as well. So as it reaches this zone 1850, this will be most likely our final targets if we want to buy the pullback, the major pullback from the current bearish condition. So in terms of the price to buy, to be more specific or more precise, I think somewhere at 1793, all right, will be pretty good. So let's just place it right here, somewhere at 1793 if we were to buy. In terms of the stop loss, again, we're going to put it pretty tight as well, otherwise risk ratio wouldn't make sense. By the most, I just put it just below the low right here. Okay, so that would be about 1765. And in terms of target, as I've mentioned, the first one is right here, 1822, and then all the way to 1850 as our final targets. Okay, so that is for the goal, pretty straightforward as well. Moving on, we have the Nasdaq. So Nasdaq at the same time also start to go down. Why? Because if the Federal Reserve is planning to taper earlier, or to raise interest rate more or sooner, then of course hot money will be reduced, and therefore the US stock markets, especially Nasdaq, all right, which is very much inflated by hot money, will come down. So it has already started to come down. We are seeing some forming right here, an inside bar formation. If the price breaks out of this inside bar and start to go down, you will definitely go even lower. So are we still going to look to buy the Nasdaq? Well, the answer right now is maybe yes. We'll still try to attempt a buy, right? We'll still try to attempt a buy right here as it reaches this level, right? 13,800. Because ultimately, I think right here it is still a very important buy sell area. As you can see, support, resistance, turn supports. So if it's able to come back down to this level, I don't think there's any reason why we shouldn't try to attempt a buy right here. Because at the end of the day, the price may just go into consolidation within this area. So we are essentially actually buying at the low of a minor range right at the top here. Right, that's very possible. Now, of course, we are coming back to the bottom of a rising channel as well. If I were to try to connect it better, right? So let's say I'm just trying to connect the highs at the top here, and I'm just going to shift it around a little bit. All right, this is the area itself we are looking at. So once it reaches this level, still well within the rising channel, then we can actually attempt a buy. So if we were to buy right here, stop loss will be just below this previous low right here. So I think somewhere about 13,650 would be good enough. First target, of course, back to this inside bar area. Highest, we'll just look at the neckline area right here at 14,040. All right, so this is the trading plan for today. All right, so that's for the Nasdaq. Let's move on. All right, we're looking at WTI, the crude oil market. So as expected, right, it did pull back. It does seem that the FOMC didn't really affect the oil markets that much, because I think at the end of the day it wouldn't really affect its demand that much, because right now the US oil is very highly driven by inflation itself, and rather the Federal Reserve has acknowledged the rising risk of inflation as well. So that doesn't change anything really for the oil markets. And in fact, it just happened as what we're expecting, waiting for a pullback back into this demand zone. All right, and then somewhere at the bottom of this rising channel, and looking for a buy opportunity. So right now, if let's say we do have the chance, if the market does give us a chance when it actually pulls back again, all right, retest the zone right here, I would say that will actually give us a very good opportunity to buy, going all the way into the 15-minute time frame. Be very specific. All right, somewhere at 71.50 will be good enough, right? Will be good enough for us to attempt a buy. So it will be very straightforward for the crude oil markets. Our trading plan will just be waiting for a smaller pullback, and then we'll just attempt a buy. So I think I'll just show it in the 1 hourly time frame. We'll buy somewhere right here, okay, 71, 48 or 50, about that price. Stop loss just below the bottom of the channel. Alright, so that will be about 71.1, and then the profit target will be back to the neckline right here. Final target will be all the way to the top of the rising channel, and again we are expecting the price to keep on going upwards as until it reaches the major equilibrium at 76.6. Right, so that is for the US oil. And last but not least, we have the Bitcoin. Right, so the Bitcoin came down as expected, but it did not reach the demand zone at the bottom. Well, doesn't matter, it's really close really. So I wouldn't say it did not reach. It did reach, but just didn't go to the very specific point itself. So right now we are seeing a rebound in the price from the support at the bottom of the channel, or rather at the demand zone right here, previous high turning supports. So into the 1 hourly time frame, well, we definitely will be looking to buy the Bitcoin right now. Should the price, I think this is very similar to the crude oil, if it's able to pull back again, alright, and retest the low, and if there's a reversal, then we really want to buy it again. Alright, but I think somewhere right here will be good enough. So there will be 38,800. We can attempt to buy the Bitcoin again. So if we are going to buy at that area, our stop loss, right, just below the zone right here, and then in terms of the target, we'll come back to this area. This is the breakout area. That's the first level, and then we'll just aim all the way to the top. All right, the supply zone at the top right here, and of course the top of the rising channel as well. So that will be our final targets. But then again, as I've mentioned, the most important level, or rather the most important supply zone, is all the way into this area, 40. I'll just put as 48,000, easy for us to remember. So but in terms of the trading plan just for today, we are only aiming at the top of the channel, so that will be at 42,800. That area itself will be good enough for the day itself. So with that, I've come to the end of today's forecast. Thank you for watching. If you like our video, do hit the like button. Subscribe to our channel so you keep yourself updated on our trading plans. So see you again tomorrow.